Hi, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. He's got charts and a whole bunch of knowledge. Pay attention. He's going to drop the 411. What's going on, brother?
Our national tender rejection index largely in a holding pattern over the last month or so, probably 2 months. We bounced off of a floor, getting really close to this 20% boundary that we just can't get.
Way back here in the beginning of August.
Yeah. If you go all the way back to February there, you can see that we were moving that direction. Looked like things were going to stabilize this year. Nick Austin jumped in, said, nope.
Well, he just admitted he sneezed and hit the wrong dial and froze Texas accidentally.
Froze all of Texas, and things are now still slowly kind of coming out of that. But 21.6% is about as good as we're going to get for the moment. Looking at, over the last few years, see if any trends to look out for, any kind of seasonal patterns that might emerge here, however unlikely they may be. There is a little bit of a dip in the month of October. Traditionally, in terms of rejection rates, overall capacity tends to loosen a little bit. It's probably going to be hard to discern if it does. If you look back to last year, you dropped from 27 to 25%. Ooh.
Man, what a loosening of capacity that was.
Not a lot
the great
of
October loosening.
Yeah. 2018 was the year of the big loosening in October, and
it was.
That's probably that's not very likely to happen.
And that just continued over on the other end here. When you look at the orange line, that's a continuation of it. Just
this year is nothing like that. If
not
we go
even
ahead
close.
And look at the OTVI, the demand side indicators, we're above where we were last year in terms of overall freight demand. OTVI is superseding last year's volumes, and you look at the previous, the years before that, we're not even close. I mean, look at the 2018 in orange here. We saw this big dip, but it looks almost like nothing. Like compared to the rest of it.
Yeah, no, you're right. I mean, the big thing that I'm watching is this goalpost up here at around 17.5. Do we hit that?
I feel like that's going to happen earlier this year, just because we saw a little bit more.
I think the peak will happen. Yeah. Will that peak be above that or below that?
Yeah,
is the question.
I think everything's been pulled forward. We've got increasing lead times going across the board. So let's look at our ocean tender or TEUs index here. Inbound TEUs, looking at. This is a leading indicator of overall demand. It's also a current indicator of what shipper sentiment is, if you think about it. This is the activity.
It's an economic indicator for certain.
Yeah, they are booking freight, so they still are trying to fulfill that inventory, because this has traditionally about a 20 to 30 day lead time to final destination. Now we're looking at 60 to 70 day lead time to final destination because of all the port congestion, and shippers are still booking freight higher than what they were last year. More freight, more TEUs coming into the United States. 2 months from now is December.
So when I'm looking at any one of these points on here, so I'm looking at this 197.77, this index right there. That is the departure date for these bookings, right?
Exactly.
That's the level of bookings for departure date, whatever that date is.
Today.
So it's today's
and there's
date.
actually a 7-day lead on it. If you zoom in on it, you'll see a little 7-day figure.
And you can get that on the ocean shipment in the app section on Sonar, right? The other part, yeah.
Exactly. So demand still looks strong moving forward. So we've covered this now. Let's go ahead and check out what's happening in the United States right now with our map. Weighted rejection index. Looking at the port sides, we're talking about a lot of that inbound demand. Up here in the Northeast, a little bit of easing. This is our weighted rejection index. So oranges indicate weekly easing, blues indicate weekly tightening. But just down the road here in Baltimore, it's tightening. So very, very divergent pattern.
There's a lot of volume there sucking that capacity into it too, and carriers are responding, I would think. They've got some tenders here that are attractive to carriers, right? The price and the distance would indicate, right?
We looked at the spot rates going into the Northeast from Baltimore. It's pretty high.
Nobody wants to go there, right?
Nobody wants to go there. This is a very consumer-heavy area of the country.
Sure.
This up here, this huge Harrisburg market.
A lot of distribution coming out.
A lot of distribution, so a lot of demand, a lot of reason to go in there if you're a carrier, if you want to get stuck in the Northeast for a while.
Well, what I'm saying is, if it's easing right now, then there's something that they're shipping out of there that carriers are liking at this particular moment. Maybe it's the distance has changed or whatever. You got to look at those.
Or they just got more trucks going in.
Or they just got more trucks. Excellent stuff. We'll catch up with you a little bit later in the program. Zach, thank you very much.